In this video, I'll analyze the Q1 FY26 result and Concall of Netweb Tech. So let's talk about their company overview. So Netweb Tech is a manufacturer of IT hardware like supercomputers, data centers, and they also provide software support for their clients. And that is what makes Netweb Technologies a very well integrated service provider. And what are the services they provide? They mainly provide services like supercomputing services, then private cloud, AI systems, data centers. So mainly these are the services they provide. Okay, and if I talk about their revenue by segments, like 30% of their revenue comes from the supercomputing segment, then another 30% of their revenue comes from private clouds, and then AI contributes around 20 to 25% of their revenue. So if you calculate, 80 to 85% of their revenue comes from these three segments. Okay, so that is the point. If I talk about their customer base, mainly IITs, then government institution like NMDC, DRDO, ISRO, these are their customer base. And also if I talk about the private customer base, mainly the asset management company, portfolio management company, and many other industry is there in terms of the private organization. Okay, so that is the point. And one another thing which is very good and important is that Netweb Tech is a OEM partner of NVIDIA, and they are one of the few OEM partner all around the world. Okay, so that is another good thing. So in terms of the so let's talk about their result in Q1 FY26. Like in this quarter, they grew their revenue by 100%. Okay, 100% year on year. And if I talk about that, what have driven that revenue growth like 100%? Mainly there was a large AI order from the defense sector. Okay, and that is what driven their revenue. That is what have driven their revenue in this quarter. Okay, in terms of the segment wise revenue growth, in this quarter revenue grew 300% year on year. Then private cloud also grew 125% year on year. So in terms of the growth, all segments have shown a very good growth in this quarter. And if I talk about the segment wise contributions of the segments, AI system contributed around 29% to their revenue in this quarter, and also AI systems grew 300%. Okay, year on year. So that is the point. And in terms of the customer base, in terms of the guidance, if we look at their guidance, they have been guiding us for a 35 to 40% growth from their IPO time. Okay, and they are consistently beating their guidance. If we look at their performance for last 2 years, they have been very consistent about beating their guidance. They are like they have been growing at a very high pace of 50 to 100%. Even sometimes they grew their revenue over 100% also. So that is another point. And the management is holding their guidance in this quarter also. So that is a very good thing, that they are giving a lower guidance and they are outperforming their guidance. So that is a very good thing. Okay, but one thing that is not good, that the customer concentration. Okay, if you look at their customer concentration in FY24, their top 5 customer contributed around 50% to their whole revenue of FY24. In FY25, their top 5 customers contributed around 51% to their whole revenue. So that is what makes the company little vulnerable, because as we know that if one of those 5 customer, if one of those 5 customer faces any kind of problem in terms of their business, then we know that what can happen. Okay, so that is a bad thing. I mean, that is a thing which I would like to see it going down like 30-25%, because for top 5 customer 50% is very high. Okay, so that is a thing they should look for. And if I talk about their repeat revenue from repeat customer, around I mean around 80% of their revenue comes from the repeat customer. So that is a very good thing, that the customers are sticking to their services. So that is a good thing. But if I look at their customer concentration, then it is not really good. But if you look at their past, they always have been a company whose customer concentration is high. So it is what I can say. But yeah, that I mean expose a little bit of risks in this company in terms of the revenue. Okay, so that is the point. So in terms of the order book, if I see their pipeline order book, and one thing I have to say that when we analyze the Netweb Tech about their order book, the main parameter is the pipeline, okay, not the L1 or order book, main order book. Why? Because mainly most of the order gets executed within 8 to 12 weeks. So that is why their orders are coming, their orders comes and goes. That is how they work. So that is a thing that we have to analyze the pipeline. We have to track the pipeline order book. And if I talk about the pipeline order book also, in the pipeline most of the orders are from government, because if any private player give them the orders are mostly executed within few days. So that is why the pipeline orders are mostly from the government order. Okay, so that is the thing. And if I talk about their pipeline, in this quarter they grew their pipeline order book by 17%, and they are growing their pipeline order book at a 15 to 20% rate for last few quarters. So in terms of the order book growth, that is a good thing that they are growing their order book. Okay, and if I talk about their conversion ratio, I mean pipeline to revenue, that is around 60% in this company, and that is also a very good thing. And the conversion time of the pipeline to revenue is around 6 to 18 months. Okay, so that is their order book, and I think that is very good, because if I talk about the size of the pipeline order book, that is 4,000 crore, that is over 4,000 crore. And if I talk about their yearly revenue, that is what that should be in the range of 1,500 crore. So it is good enough to fuel them for next few years. Okay, next 2-3 years, mostly 2 years I would say. So that is the point. In terms of the EBITDA margin, in this quarter they grew their EBITDA margin by 150 bps year on year. And if I talk about the EBITDA margin, their past performance, they have always in a range of 13 to 15% of EBITDA margin, and the guidance is also in a similar kind of like 14% EBITDA margin they are guiding us, and for a long time they have been guiding us for a 14% of EBITDA margin. So yeah, no problem with that. In terms of the PAT, in this quarter they grew their PAT by 100%. Okay, so in terms of the PAT growth also, they have done a very good work. In terms of the, and in the last quarter also they grew their PAT by 50%, around 50%, and they are growing their PAT at a very good pace. So in terms of the PAT margin, they have been in the range of 10 to 11% for last several quarters, and in this quarter also they reported a PAT margin of 10%. Okay, so that is another good thing, and the management is guiding us for a PAT margin of 10 to 10.5%. Okay, so in terms of the guidance and in terms of the execution of the guidance, both are very good. So that is the thing. And if I talk about the company, what kind of opportunity I see in this company, like as I said, the customer concentration is a risk, absolutely, because 50% of the revenue comes from just 5 customers. 60-70% revenue comes from just 10 customers. Top 10 customer contribute around 60 to 70% of their revenue. So that becomes a risk, and that is why I would like to play this kind of a company in a very conservatively, because you never know na, ki, I mean, if any of the customer faces any problem in their business, then Netweb Tech also exposed to them. Okay, so that is the point. But in terms of the execution, if I look at their past quarters, they are absolutely doing really good in terms of the execution. They are consistently beating their guidance, and that is really good thing, I would say. And yeah, management is also good. Management is doing a very good work in terms of the execution, and I think that is what I should say. We have to see that where the all things go, okay, in the future. So that is the point. So that's it for the video. Thanks for watching.